Well, nice to have you here.
Nice to be with you.
One would imagine it can't get much worse, can it?
It's been a challenging year for those two metrics you just mentioned. But, you know, we're very optimistic about 2023. The backlog's never been stronger. The currency around being a publicly traded company has never been stronger. But what you're seeing is companies take a pause until the volatility in the markets starts to subside.
Yeah. Is there a world in which even with volatility next year, you could see issuance pick up? Does it rely on maybe one big issue to happen and sort of get the momentum going?
I mean, that's part of it. I do think that irrespective of market conditions, there is always the ability for a company to come public, particularly those companies with strong balance sheets. I mean, you saw the largest IPO of the year, Corebridge, happen just around the corner. Earlier this year, they raised $1.7 billion in capital, and we were incredibly proud to be their partner for their public market life.
Do you think there'll be a pivot from, say, technology-led IPOs, right, where they bring the most visibility and dollars, to something that's more, I don't know, value-oriented, industrial-oriented?
I think what you're seeing right now is the market is very much valuing those value stocks, those companies with strong balance sheet, those companies that are some of the hallmarks of the New York Stock Exchange, the best governed companies, strong balance sheets, the companies that are in it for the long term and that think about the long term.
You think, how does the race between the NYSE and the NASDAQ evolve in this environment?
Yeah, you know, I think we're incredibly proud. We put out a press release this morning. We executed 3 of the top 5 IPOs in a very muted year. The largest companies, the most well-governed companies, they are going to choose the NYSE for a variety of reasons, not just related to coming public, despite the fact that we have the deepest, most liquid markets, we have a differentiated market model, but also our community and the platform that we serve in the market. That's really what is resonating in terms of value. And it's really why we've seen the best year since the turn of the century in terms of transfers to the New York Stock Exchange this year.
One thing that I have a hard time believing will come back would be SPAC issuance.
Yeah.
I don't know if you agree, but it felt as though that was a sort of a one-time bubble, unlike anything we'd ever really seen.
You know, we still believe in the SPAC model. I just think there's going to be fewer SPACs that come to market. You're not going to see the record numbers that came out in 2020, 2021 come to market. But I still think it is a very valid way for a company to go public.
Yeah, although don't we need to see actually a lot of them liquidate because they were unable to find a deal before you sort of get any momentum in terms of new issuance?
Absolutely. And that really comes down to the glut of the market that happened and the glut of issuance that happened in SPACs in 20 and 2021. But what the market doesn't realize is it wasn't a new phenomenon. It was just something that gained a lot more notoriety, a lot more focus in those 2 years because of the sheer number of SPACs that came to market.
I got a question about the evolution of hybrid work. Right?
Yeah.
Here in the city, MTA is going to start lightening their subway service on Mondays and Fridays because people tend to come in the middle of the week, and they might add some service on weekends. Are we seeing volume sort of reflect that at all?
I don't think you're seeing volumes in terms of the market reflect that. I mean, it's never been more vibrant than at 11 Wall, as I'm sure both of you have noticed, particularly in the second half
it gets
of
a little
this
loud.
year.
Yeah,
it gets a little loud, sometimes during your broadcast. But, you know, we're thrilled at the amount of activity coming back to New York and New York City in general. Most companies have embraced a version of a work from home, but I don't think you can underestimate the value of community. And having people convene in person really brings, both from a strategy, both from a product development standpoint, and importantly, from a conversation standpoint. And that is why you've seen record amounts of activity at NYSE, because people really want to convene. They want to talk about uncertainty in markets. They want to talk about geopolitical uncertainty, and that's how they're going to take their businesses forward.